I want to do something a little bit different for this video. A lot of my videos are scripted, and the reason they're scripted for is because I want to keep the information concise. In a lot of those videos, I talk about simple things work in trading. And this is going to be an example of a trade. It's a short in the United States dollar against the Canadian dollar of how simple things work in trading. Markets range, they break out into trends, trends form into ranges, and it's just an ongoing cycle. So if you can base a trading strategy around those simple market truths, then you're on your way. We don't need to be inundated with trading indicators or price patterns or price action. We don't need to be if we can just focus on some pretty basic concepts, manage our risk, and be disciplined and consistent in what we're doing. So this is a live trade. Let me just bring this over here. You can see that we're still active in this trade. We're up 178 pips. This red line is the current stop. So let me just talk about why this is a trade, and then I want to talk about the stop. So you can see that for a while, the United States dollar, Canadian dollar, we were in a trading range, right? We're just kind of bouncing around about 200 pips, 250 pips back and forth. And you can see, if you look at my other videos, such as the one on failure test trades, you can see we have one here. And that's this, when the market attempts to go higher, fails back inside, these are shorts below here. And you can see that I'm not in that short. This is a different trade altogether. And you can see that we have a range formed right here. Okay, so that's a trade here if you're looking to take counter trend trades, because overall the trend direction is up in this pair. So what I want to point out is if you have proper rules for drawing trend lines, you really want to connect. See, this is the highest high. You want to connect the swing that leads into that. If you can, a lot of times you might not be able to the way price goes. Sometimes it's too parabolic. But in this case, we can actually connect these two here. So what did I see here? I saw a market in a range. I saw a breakout of the range right here. And I saw a pullback. Okay. But you don't want to, you could trade breakouts. Absolutely. I have a video about trading breakouts, what you want to see. You don't want to see this in a breakout to the downside, the market running from the top of the range right through the bottom. That's not something you want to do, because we generally are going to get pullbacks in this. If we can get some basing, which is this kind of action here, before the breakout, so the basing would be, we'd have a support area right here, we'd have price action basing on it. That is more conducive to a trade that's just going to drop and not look back. But on these kind, you're going to have pullbacks. So like I had that line drawn. Now, I don't believe, and I don't think anyone should believe, that this is actually, even though it bounces almost to the pip, this is not, there's nothing magic about trend lines, right? It's just the rhythm of the market. They don't act as support and resistance. The only thing that can act as support and resistance is when buyers or sellers step into the market. We do have a range up here. You can also mark that off. So we had a couple of things lining up that traders may take notice of. The biggest one for me is we had a breakout and we had a pullback. And this was the trade entry. We had a pullback. Looks like a two-leg pullback here, right? A complex correction. These are over the weekend. And it's just seeing this action come into the market and shorting that. Very simple. You can see this is a picture-perfect pullback. So let's talk about the stop placement. The stop placement was above here. Right. Again, there's no magic to that. That's actually an ATR stop that I was using. This is a 20 period ATR. This one here. And it's just 20 period, 1.5 times the ATR was up in this area right here, roughly. If you are close to these little areas, obviously, if my stop would have come in this area here, just move it around there. That's just common sense. Not that it's going to make much of a difference. However, psychologically, if this just pokes up a little bit and stops you out and then continues, we know what that can do to our trading psyche, that's for sure. So what happens here? This is a scale out. And what that scale out represents is 1 times R, roughly. This is actually more than 1 times R because I had this big momentum candle dropping. I have an alert that I set. You can set in advance 1R, take part of your trade off. In these kind of trades, I would generally just wait for this to form and see what happens here. So this was a lot more than 1R to scale out. So the trade was going to be profitable whatsoever. So our first step in trading is risk management. So the longer I have risk on in the market, the more chance and the more opportunity the market has to go against me. So if I can take something out of the market that makes sense, which is usually 1 times my risk, I effectively make it a risk-free trade, depending on how much you scale out, of course. This stop is right here. This is the new stop. It's the red line here. And what this represents is 1.5 times the 20-period ATR. And I take that, and because we're looking at a short trade, I take that and I add it to the low of the lowest low. Why do I do that? Well, because I'm talking about average true range of the market. And because I know how the United States dollar, Canadian dollar fluctuates, because I am in Canada, and so the exchange rate is really important to me, I know that I want to be out when this starts pulling back. I'm not expecting a sustained trend in this market. And I did a blog post and a video about summertime trading, and this is the kind of stuff that happens. And a lot of this move can be attributed to oil prices. Canada's reliant on oil prices and not so much the economy. You know, we in Canada, people talk about our GDP, and I know our current government talks about GDP and points to that as a success of their policies. Well, the problem is GDP by itself is not a good measure of the economy. Overall, the American economy is a whole lot better than the Canadian economy. If you adjust GDP to per capita, which is a better measurement of it, and it's more accurate of the state of the economy, it's not doing very well in Canada. The government will never tell you that. They'll never sell that come election time, but that's just the fiscal reality. So overall, this trade's going to work out, right? I'm going to make profit on it in 2 different parts. It's a very simple trade. So what is the point here I'm trying to get across? Simple works. This is a simple breakout pullback in this currency pair. The entry is quite simple. You see basing. It doesn't look so good on this chart. I use TradingView from other charts. This is the actual broker screen on the Oanda platform. And I love Oanda because I can get right to the pip when it comes to risk because of how you can adjust unit sizes. And using the ATR as a stop loss placement and as a trailing stop placement. And all this has been covered in so many videos on my channel. So I'm going to keep this short. I just wanted to hammer home because I have had some comments in the YouTube and I have had some comments on some blog posts back at Netpicks. People asking if simple does work, and simple does work if you know what you're looking for. All right, thanks for watching.